Well, 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 what a crazy few hours it's been for crypto. You wait ages for some good news, and then a whole lot just comes along at once. So, without further ado, let's unpack what happened. So, as the US woke up to another day in crypto on Thursday, the first bit of good news started coming through. Alex Mashinsky, the founder and former CEO of Celsius, the crypto lending and borrowing platform that went down last year, leaving hundreds of thousands of customers facing financial ruin, was finally arrested. Now, Celsius filed for bankruptcy almost exactly a year ago, and since then, the company's creditors, many of whom had their life savings on the platform, have had to endure seeing Mashinsky at liberty while bankruptcy proceedings have dragged on. Yesterday, they finally got the satisfaction of seeing justice come for him.
Today, I'm announcing the unsealing of an indictment charging Celsius's founder and CEO, Alex Mashinsky.
So, Mashinsky is facing a whole host of charges related to Celsius and the fraud he perpetuated there. Enforcement agencies have lined up to throw the book at him. He and Celsius are facing charges from the SEC, the CFTC, the Justice Department, and the Federal Trade Commission. He's accused of misrepresenting Celsius's dire financial situation prior to its collapse, manipulating the value of the Cell token and subsequently dumping it on investors, and of course, good old-fashioned wire fraud. According to the Wall Street Journal, Mashinsky faces a maximum of 20 years in the slammer if convicted on all counts. And as you might expect from someone as arrogant and delusional as him, he strongly denies the charges. He's also been released on a $40 million bail bond secured against his Manhattan property because, well, that's just how the system works for rich crooks.
It's my address. Anyone wants to send me some money?
As for when he'll actually face trial, it's kind of hard to say, but it likely won't be for some time. Sam Bankman-Fried isn't due in court until October, and while the mess Celsius was in pales in comparison to the absolute uber-shambles of FTX, it's likely going to be a good few months at least before Mashinsky faces the beak. Nevertheless, his arrest represents a vital step towards justice and will be of some comfort to the many, many people whose lives have been ruined by him and Celsius. As to when those people will get their money back, that remains to be seen. So, that news certainly put a spring in the step of most people in crypto, except Alex Mashinsky, of course. But bigger news was about to break. We'd barely had time to speculate whether Mashinsky and SBF might end up sharing a cell and spending the next few decades staring blankly into each other's eyes before a massive development occurred in the Ripple case. Yes, that seemingly never-ending saga of Ripple versus the SEC over whether the former's sales of XRP constituted an unregistered securities offering. Well, yesterday, the judge in the case, Annalisa Torres, ruled that Ripple's sales of XRP to the general public did not constitute a securities offering. However, this did not apply to those sales of XRP to institutional investors who, quote, would have understood that Ripple was pitching a speculative value proposition for XRP with potential profits to be derived from Ripple's entrepreneurial and managerial efforts. So, in short, XRP not a security when sold to the public, but it was when sold to institutions. Stuart Alderoty, Ripple's chief legal officer, took to Twitter saying, quote, a huge win today. As a matter of law, XRP is not a security. Also a matter of law, sales on exchanges are not securities. Sales by executives are not securities. Other XRP distributions to developers, to charities, to employees are not securities. Cue pandemonium. As you'll doubtless be aware, XRP began to pump like nobody's business, at one point spiking to almost 94 cents against USDT on Bittrex. This was the news that XRP holders and indeed much of the wider crypto community had been waiting years for. XRP may have been the big winner, but other altcoins saw massive spikes too, not least those which were named as securities by the SEC in its recent filings against Binance and Coinbase. Cardano's ADA, Solana's Sol, Polygon's Matic, Cosmos's Atom, Algorand's Algo, and others besides saw double-digit pumps, while the rest of the market was also in party mode. As I record this, BTC is over 31k and ETH just over 2k. Even Stellar, the Ripple rival built by Ripple co-founder Jed McCaleb, saw its XLM coin pump by over 50%. And it's not hard to see why this is good news. If the SEC can't prove that XRP is a security, well, it likely doesn't have much chance when it comes to all the other crypto projects in its sights. As crypto analyst Adam Cochran put it on Twitter, quote, "Overall, a huge win. XRP is one of the more centralized foundations with a key figurehead who had standard sales via exchanges and formal distribution programs. If those aren't securities, nearly nothing sold via exchanges is." Take that, Gary. Oh! As you can imagine, there was something of a shortage of sympathy for Gary and the SEC on crypto Twitter, not least because the SEC's sour grapes were pretty apparent in a statement it put out in the wake of the ruling. Quote, "We are pleased that the court found that XRP tokens were offered and sold by Ripple as investment contracts in violation of the securities laws in certain circumstances." It's important to note that, despite the good news though, this does still represent, as Reuters put it, quote, "a partial win for the SEC." The selling of XRP to so-called sophisticated investors like hedge funds and other institutions, those certain circumstances mentioned by the SEC in its aforementioned statement, remain a securities offering. Whether Ripple and its executives are on the hook for these institutional sales remains to be seen. Reuters cited the judge as saying that will have to be decided by a jury. So, this saga ain't over yet, in other words. But that's quite enough party pooping. This is overwhelmingly good news, and as prices pumped, the party only got rowdier. Coinbase, itself battling the SEC, was quick to strap on the bear helmet and start chugging. Paul Grewal, the company's chief legal officer, tweeted, quote, "We've read Judge Torres's thoughtful decision. We've carefully reviewed our analysis. It's time to relist." Booyah! It's impossible not to read that tweet and deduce that Paul wrote it with an almighty grin on his face. As well he might. The SEC's case against Coinbase has been dealt a big old blow, and the company's stock has also been pumping, closing yesterday at $107, its highest level since February. Crypto.com also announced it too would be relisting XRP, while Gemini is, quote, "exploring doing so too." Other crypto-focused companies like Miner, Marathon Digital, and Michael Saylor's MicroStrategy also saw their stocks pump on the news. In short, folks, crypto has a lot to celebrate today. Maszynski facing the music, a big win for Ripple, and prices pumping. So, what now? Well, there's still the not-so-insignificant question of those spot Bitcoin ETF applications from the likes of BlackRock and others. Will the SEC, bruised and demoralized, lash out and turn them down? Or will it bow to the inevitable and admit that crypto is unstoppable, it's here to stay, and the sooner US authorities wake up to that fact, the better? Well, there are still many challenges facing the industry in the US and elsewhere, but after yesterday, they're suddenly looking a lot easier to overcome. And that's it for today's update, folks. Stay tuned, though, as we'll be covering a lot of what I just talked about in more detail in the coming days. Please do like, subscribe, and share this video if you enjoyed it. Check out the Coin Bureau deals page if you want to trade XRP or anything else for that matter on the top exchanges and get a juicy discount on the best hardware wallets to keep your crypto safe. Thanks for watching, and I'll see you again soon.